Good morning, ladies and gentlemen. Welcome to this session. I think you know that my plan was to do the statement of financial position, but I thought, considering what you are facing in your assessments, let me just look at the type of questions that I might expect you to face. Then you can see how to do them. Your questions may not be exactly like the ones that I'll be using, but there is a relationship. So you'd find that if you understand how I'm going to do these questions, then you can also be able to do your own questions, but some of them can even be the same, right? And my apologies for the past few days. There were technical issues that were disrupting me. I really needed to see you before your due date of your assessment. That's why I had to force that, although it's a holiday, I had to ask you to join. And you can see that some of you can join, but a recording will be made available by this afternoon. Right. So we'll be using the document that I actually sent to you earlier on. Right. It's the same. That one is a PDF, but it's the same as this one. So we're going to start from the first one until like the grace of God. I would like to finish this document. I know we can finish. I know we can finish. Right. Indicate whether the statement is true or false. Membership fees received in advance at the end of a financial period will be entered on the debit side of the membership fees account. Right, a membership fees account is an income account. And since it's income, it increases on the credit side and reduces on the debit side. Now, membership fees received in advance at the end of the year, that means they don't belong to this year, they belong to next year. So they have to be removed from the membership fees account. So we have to reduce our income account. And when we reduce our income account, we record it on the debit side. So that is true. But you have to be very careful because they can ask you membership fees received in advance at the beginning instead of end. If it's at the beginning, it will be the opposite. Because if they are received in advance at the beginning, that means they were received last year and they belong to this year. So they have to increase our income. So we record them on the credit side. So if it's at the end, we debit in the membership fees account because we have to reduce the income account. And if the membership fees accrued, it will be exactly the opposite. Any questions then? Right. Question 2. We are given information, then they say the correct bank account in the general ledger of Babu Services. Right. Our bank account, so you will be picking these figures from this, picking them to the diagram there. But I've already entered them. But I will explain what will happen there. The first thing that is to happen, we have to start with our opening balance. Our opening balance of our bank account. Remember, bank is an asset. Bank is an asset. Because it is an asset, it increases on the debit side and reduces on the credit side. So you'd find that receipts, they normally go on the debit side because when you receive money, that will increase the money in your bank account. And payments, they go on the credit side because when you pay, you'll have to record on the credit side. Right. Now, so what happens here? We first have to find out what was the balance from last month. We're in August, so we have to find out what was the balance from July. Now, if we check here, the favorable balances per bank account from July, our opening balance should be this one here. And it's given as a question mark. So we can be able to find our opening balance, bank account, opening balance would be equal to 20,625 plus 16,720 minus 25,000. What do we get? I'm waiting for you guys. Thank you. So this is how this balance here of 12345 was obtained. This balance here, if you can see. If you see, these ones are my suggested solutions which are filled in. So this 12345, that's how it was obtained. Right. Any questions there? Right. Then we need the receipts. Remember, we said that we need to record our receipts and our payments. Right. So if you can check here, the total receipts, we obtain them from the cash receipts journal, and the total payments, we obtain them from the cash payments journal. Right. So let me just do the cash payments journal and cash receipts journal. Right. Cash. Let me start with the receipts. August 2019. Right. Right. You start with your subtotal. What is subtotal? This is the total that we already have in the cash receipts journal before we do anything. We are told here that the balance is in 2031 August after all the differences in the. Oh, sorry, we don't need to prepare this one because they said the balance is in 2031 August after all the differences in the bank statement had been taken into account at this one. So these are the cash receipts. So we take straight this 57,370 as the receipts and the 52,200 as the payments. Right. So that will be, there's no need for this here now. So the receipts, they go on the debit side. That is the receipts, the 57,370 goes on the, and the payments, they go on the credit side. Right. Now to get this balance here, you would find that for me to calculate that balance, first of all, I had to calculate this total here, the total on the debit side. So I said my totals were equal to 12,345 plus 5,737. Remember that your total in account will be the bigger total. So that was 69,715. And then my balance carried forward will be the difference between the two sides, which was now that total 69,715 minus the payments that I had on the credit side, which are 52,200, of which you get 17,515. So you will then be picking your answers from here. So you check your answers. 17515, it was this one. So then you remember that you pick and drop in the relevant cell when you're answering. And normally, if there's nothing to be entered, if it's an amount, they expect you to put a 0. And if it's a details column, they expect you to put NA if there's nothing. Don't just leave them blank. You will lose marks. Any questions there? Right, we'll go to question 3. On 2 January 2002, a tenant of B&D Dealers did an electronic funds transfer of 270,000 into B&D Dealers business bank account. The monthly rental is 18,000 per month. The financial year is December 2002. What would be the closing transfer for the transaction at 31 December? Right, when it comes to rent, the closing transfer that is to be done, it will be done if there's an accrual or a prepayment. There is an accrual if the tenant paid less than what you were supposed to pay. That means you'll be owing the business. And there is a prepayment if the tenant paid more. Right, so we have to find out, did the tenant pay more or did the tenant pay less? If he pays exactly the amount that we need, there will be no adjustment. So to find how much, if he paid less or not, we first have to find the total rent. Right, the total rent is supposed to be total rental income for the year would be equal to 18,000. It's per month multiplied by the months in a year, which are 12. What do we get? Thank you. 216. So the rent is supposed to be 216,000, but the tenant paid 270. So that means the tenant paid more. So there was a prepayment. So there is what we call income received in advance. Which is equal to 270,000 minus 216,000. Which is equal to what? Thank you. 554,000. So there was income received in advance of 54,000. So when you have got income received in advance, and you should follow these instructions, use a full stop to indicate any decimal. So don't use a comma in all your questions. Use your full stop if there's a decimal. That is if there is any decimal. You don't have to put a decimal when it's not supposed to be, when there are no decimals. Then if there are decimals, round off to the second decimal full stop. And for these questions, spelling is very important. Make sure that your spelling is correct. And don't use special characters such as and. Where there's an and, you have to write AND straight. No abbreviations, and it's case sensitive. The very first letter is the only one that should be a capital letter. The rest should be small letters. Right. Now for rental income, we found that there's a rental income of 54,000 that was prepaid. Right. So that means here in our answer, we're going to debit rent income. Now here there's a dilemma because sometimes they call it rental income. Remember that the answer is case sensitive, so it all depends with what they will mark. Why do we debit rental income and you don't put space? We debit rental income because rent income, it's an income which increases on the credit and reduces on the debit. So if a tenant is paid in advance, we have to reduce our income because that 54,000 does not belong to this year. we have to take it out. So to reduce our income, we debit the income. So please, guys, when you receive this document, this is 54,000 here. If you know that this is 54,000 there, right? Then we have income received in advance. Again, $54,000. Right. So please make sure that when you receive this document, this is 54,000. Any questions there? Right. Then the following transactions occurred on 15 March in GS Electricians. They bought a volt tester on credit for 2,000 and rendered services on credit for 3,000. The correct effect on the accounting equation. All right, we start with number A. When you buy a voltage tester, that's part of your equipment. Equipment is an asset, and your assets are increasing. So we have to debit the equipment, and we credit the payables because we bought on credit, our liabilities are increasing. So we debit equipment and credit the trade payables. So that's why here you see that, oh, it was in this form. There was no effect on equity. That's why you see that there's a 0 here. There's no effect on equity. There's no effect on bank. There's no effect on trade receivables, but equipment, there's a 2,000 increase. And payables, because we bought on credit, there's a plus 2,000. You should be very careful. Our equipment is increasing because we bought equipment, and our payables are increasing because we are now owing our creditors because we bought on credit. Right, then the second transaction, rendered services on credit to W right for 3,000. When you render a service to your customer on credit, we debit trade receivables because it means we now have a client who is owing us, and we credit services rendered, which is income. We have earned income. Remember, in accounting, we record income even if we have not yet received the amount. So that means here we would say capital, there's 0. Income, we add 3,000 because of the, we're adding the income here, the services rendered. Bank, we didn't receive any money, it's 0. Trade receivables, 3,000 because we rendered the services on credit. And on equipment, there's nothing. This has nothing to do with equipment or payables. Any questions? Right. Next question. Accuracy, validity, and qualitative characteristics of financial statements. That's false. The qualitative characteristics of financial statements are timeliness, verifiability, comparability. We've got timeliness, comparability, verifiability. Then there's a fourth one, which we should verify. What is the fourth one again? Because I think I've put timeliness, verifiability, comparability, then there is understandability. Exactly. There's understandability. So we don't have accuracy, and validity. So our that answer is false. Right. Then next, current cost reflects the current amount that would be received to acquire an equivalent asset. That is wrong. Why? Because of this word. It's supposed to be current cost. When you are saying your current cost, it's an amount that you would pay to acquire an asset. You don't receive when you're acquiring an asset. You actually pay. So because of the word. So you should be very careful. Some of these things, they can be just wrong because of one word. So it's false because of that word. But if it was paid, it was going to be correct. All right. Number 7, withdrawals made by the owner decrease equity and are therefore considered as an expense of the business. That's false. The first part is correct. Withdrawals, they decrease equity. Drawings, they decrease equity, but they are not an expense of the business. They are what is called an appropriation. It has nothing to do with the business. Business expenses should be for the business, not for the personal owner. Right. Next, an account in the general ledger is represented in a T format, and the right-hand side is referred to as the debit side, and the left-hand side is referred to as the credit side. False. In a T account, the left-hand side is the debit side, and the right-hand side is the credit side. So that's wrong. Right. Right. They said that we should use the following information to calculate total equity. Right. So we can say our equity is equal to capital plus profits minus drawings. Right. Then our profits is equal to incomes minus expenses. Then in this case, our incomes is equal to, right, if we take our incomes here, the incomes that we have in this question, we have services rendered, we have rent income, we have interest income. That's it. Those are the three incomes. So to get our income, we would say 450,000 plus 60 plus 36. 450,000 plus 60,000 plus 36,000. What do we get? Thank you. 546,000. Then expenses. Now our expenses will take stationery, wages, insurance. Those are the three: stationery, wages, and insurance. So we'd say 2,200, 13,500, and 15,600. So that is equal to 2,200 plus 13,500 plus 15,600. We're going to get 31,300. Thank you. 31,300. Since we now have our incomes and expenses, we can calculate our profit. That means our profit is equal to our incomes minus our expenses, which is equal to 546,000 minus 31,300. What do we get? Thank you. 514,700. 514,700. Now, since we now have our 514,700, we can now calculate our equity. Remember, we said our equity is capital plus profit minus drawings. Right. Our capital and our drawings were given. This is the capital here, 630, and our drawings are 25,000 were given here. So we'd say 630,000 plus 514,700 minus 25,000. What do we get? $1,119,700. Right. So that will be your answer. You have to, please, when you type your answer, don't put any spaces. Otherwise, it will be marked wrong. Number 10. If debentures are redeemable within the next 18 months, the debentures will be shown as a current liability. That's false. Current liabilities should be redeemable or payable within 12 months. So as long as it's now more than 12 months, that's not a current liability. Right. Next. On 1 September 2018, Mr. Ultena started a new blacksmith business called Iron Duke. Iron Duke manufactures and sells domestic cast iron furniture. The following transactions took place during the first financial year of the entity ended 31 August 2019. Now the question is, show the effects of the depreciation transactions on the basic accounting equation with a plus sign for an increase and a minus for a decrease. Also indicated the amount that will be affected by each transaction. Right. They said depreciation on buildings must be written off over 20 years. 20 years. So they have our depreciation and on buildings would be equal to, right, on 1 September, that is the beginning of the year. Our year is ending on 31 August 2019. The owner, Mr. Ultena, made this new personal machine. Okay, the building is here. On 1 September 2018, the factory building the business will be using was purchased for 230,000 using a long-term loan that is payable on 31 March 2024. So that is 230,000. And we know that it will be depreciated over 20 years. So we'd say 230,000 divided by 20. What do we get? Thank you. 11,500. Right, so that's why here we have a that's why you see that I've got 11,500 here. It reduces the assets. Depreciation reduces assets. That would be accumulated depreciation building. Accumulated depreciation for buildings. Then we credit depreciation. And depreciation is an expense, so it reduces equity. And depreciation does not affect liabilities. So on the liabilities, that's why it's 0 and NA. Depreciation does not affect liabilities. So it will just be debit your accumulated depreciation that will reduce the assets. Sorry, like the assets will be affected by the accumulated depreciation as a minus, and the equity would be affected by the depreciation also as a minus. So you should be very careful. Under the assets, it will be accumulated depreciation, and it will specify the exact asset. And you should also follow the instructions. They said keep the sequence buildings, vehicles, then machinery. So like this, it will be wrong because if you see, I started with machinery here. So when you do it, you should start with vehicles, not machinery. Now let me just look at machinery now, or maybe let's use the order that you were supposed to use the vehicles, right? Now the vehicles, they said the vehicle is here on 31 August 2019. Wu Tenor decided to trade in the old delivery vehicle for a new delivery vehicle. The trade in value was 14,500 and the cost of the new delivery vehicle was 60,000. And you should note that this trade in happened at the end of the year with the difference settled in cash. On 1 September 2018, the owner, Mr. Wu Tenor, contributed this delivery van, which had cost 45,000 when new. The vehicle was brought on 1 September 2016 by Mr. Wu Tenor and had a carrying value of 27,000 on 1 September 2018 with only 3 years of the remaining useful life. Depreciation needs to be written off on the straight line basis. Right, now one thing that you should understand, the new vehicle was bought on 31 August 2019 at the end of the year. So there will be no depreciation on the new vehicle. Depreciation will only be on the old vehicle which he brought in on 1 September. Right, although he bought it on 1 September 2018, although he bought it at 45,000, we are not worried about the original cost price. According to the business, the vehicle came on 1 September and its value was now 27,000 on 1 September 2018. So according to the books, it will be 27,000, the cost. And the depreciation will be on the remaining useful life of 3 years. So we're going to say depreciation vehicles $27,000 divided by 3, which is equal to 9,000. So here, that's why we have minus 9,000 here and minus 9,000 for the vehicles. Remember, I said I made a mistake there. It was supposed to start. We were supposed to start with the vehicles, but I mistakenly started with machinery. So you will lose marks if you put it like this. Right. Then machinery. So if you do it like the way that I did, my friends, that means you get 0 for all this. Because maybe you only get a mark here on the depreciation because it's the same. But all the other things will be wrong. Only on these two, depreciation. Otherwise, I can say up to here, it will be wrong. You should follow the order. Always follow the order. When they say keep sequence, you should follow the sequence. Right. Then on the machinery, machinery must be depreciated at 10% diminishing balance. Note that whether it's straight line or diminishing balance, it's not an issue in this question because this is the first year of business. In the first year of business, it doesn't matter whether a straight line or diminishing balance. Right? There were two machines. The owner brought in a machine on 1 September at the beginning of the year for 15,000. This one will have a full year's depreciation. And they bought another one for 11,500. And they paid 1,500 for installation. Right? Installation fees are added to the cost of the asset. So actually, it will be 11.5 plus 1.5 the cost, which is 13,000. So installation costs are added to the cost of the asset. Both transactions took place on 30 November 2018. So that's 13,000. This cost, this one is 15,000, but this one was bought on 30 November. So it will not have a full year's depreciation. Remember, our year is ending in August. So we'll depreciate it from December. November, we don't count it because it was on 30 November. So from December to August, that would be 9 months. So we're going to say depreciation machinery, which is equal to 15,000 times 10%, plus 11,500 plus 1,500 times 10% times 9 divided by 12 because it was only used for 9 months. Right? Can you calculate that figure? Please make sure that you use your brackets correctly for you to get the correct answer. What do you get? Right, thank you. 13,113. But I got 2,475 here. Something is wrong there. Actually, it appears too big. It can be 13. Please do the calculation separately. You can say 15,000 times 10%. Then you do 13,000 times 10% times 9 over 12. Then you add the two. Or maybe for the sake of time, you will calculate later. We can just take the figure that I calculated there and assume that is correct. That is 2,475. So then we will reduce the assets by 2,475 and then reduce the equity by 2,475. Any questions there? So please, if an asset is bought during the year, our depreciation will be on the months that we used the asset. Right. Number 12. An example of a tangible non-current asset is machinery. That's true. A tangible non-current assets are those non-current assets that we can see that have got a physical existence, like land and buildings, motor vehicles, machinery, and stuff like that. That's correct. Right. Number 13. The gross profit calculated in the trading statement of a non-profit entity is transferred to receipts and payments. False. We transfer it to the income and expenditure account. We don't transfer it to receipts and payments. We transfer it to the income and expenditure account. Right. Next question. A disadvantage of using a single entry bookkeeping system is that assets and liabilities are not recorded. Therefore, financial statements are prepared using unreliable information. True. When a business is using single entry, like most of them are go-go's in the location, when they are preparing their books, they don't normally record in detail. So you might find that when you go there, you don't even see the values of the assets and liabilities. So there is unreliability. But when everything is being recorded properly, you might find the assets and liabilities there when double entry is properly followed. Right. Debentures may be secured by a mortgage. That's false. A liability, you can't secure a liability with a liability. You can only secure a liability usually with assets. like a mortgage can be secured by a building, so that if you fail to settle the mortgage, you then have to forgo your building. So that is wrong. Those are both liabilities there. Right. Mr. T. Shale, a data of JJ Stores owed 5,004 to JJ Stores, which has been overdue for the past 7 months. Interest at 15% per annum must be charged on the overdue accounts. The interest has not been recorded in the books. What would the correct journal entries to record the interest on the overdue accounts? Right. First of all, you have to calculate interest, the interest. Our interest is equal to 5,004 multiplied by the interest rate, which is 15%. But remember that 15% is per annum. But Mr. Shale has not been owing for a whole year. He has only been owing for 7 months. So multiply by 7 and then we divide by 12. What do we get? Okay, we can just take down there. That's 437.85. You can calculate later. Right. Interest, when you charge your data interest, the account to be debited will be the debtor's account or the trade receivable. Why? A data is an asset. When you charge them interest, their amount owing will increase. Assets increase on the debit side. That's why our account to be debited is the trade receivables or Tlale's account. And the interest that we charge our data is income. Income increases on the credit side. That's why our credit is interest income. So when you charge your data interest, it's income to the business. Any questions there? Right. Question 7. We need current assets. They said keep the sequence there. Keep the sequence strictly as follows when addressing the information provided under information. Start with 1. Right. So start with 1. A physical inventory count conducted at year end revealed that the following trading inventories or inventory were on hand. These are the inventories. We add them together, they will give us inventories. Right. So let me just do a table that can be viewed here. Current assets. Right. We'll start with inventories. We'll add all those items on number 1. That is 290, 620 plus 250 plus 260 plus 1,550. What do we get? Right. 29268. Right. Then they said that after 1, we should address 3, I think, and 4, they are related. Okay, 3, the rental income for May and June is still outstanding. Then number 4, Mrs. C BT disappeared. It was decided to write a debt amount to 2,600 off as irrecoverable. Then number 5, it was determined that on 30 June, the allowance for credit losses should amount to 7,500. All those number 3, 4, and 5, they can affect trade and other receivables. Please remember that they don't want you to put that end. But I think this one is given, so it's not an issue on this one. Right, your trade and other receivables, you take the data that are on the list, which are 28. Right, from that 28, you don't subtract this allowance. The allowance will subtract the one on the additional information. So we'll get that 28. Then we'll add the rental income for May and June, which is still outstanding. We'll add it. Any income accrued is added to trade and other receivables. How much is it? We know that our rental income is 168 here. If 2 months are owing, that means they paid for 10. So to find out how much it is per month, we say 168,000 divided by 10. Then we multiply by 2. Right, so, and then we are going to subtract this data we have to be written off to 650. And then we subtract the allowance for credit losses 7,500. So we're going to say 280,000 plus 168,000, that's the rental income, divided by 10 times 2. The 2 is the months of May and June that are outstanding, plus minus the one who disappeared, which is 2,650. Then minus the allowance for credit losses on number 5, 7,500. What do we get? So the 280 is the debtors on the list. The 168,000 divided by 10 times 2 is the rent for 2 months, according to number 3 for May and June, which is outstanding. And the 2,650 is the data that is to be written off. And the 7,500 is the allowance for credit losses. We subtract the new one, 303,450. So that's 303,450. Right. Then they said after this, we should address number 6. On number 6, a telephone account of 150 for July has already been paid. Remember, we're preparing for June. So this is for July. So this is what? Prepaid expenses. That's 1,150. Right. Then they said after this, we then address number 2. The VAT input was calculated wrongly. The amounts need to be decreased by 1,500. So we have to decrease our VAT control by 1,500, which is this one here, VAT control of 24,000. So we have to decrease it. VAT input is an asset, remember. So if our asset is to be decreased, that means our VAT control will also decrease by 1,500. So we have our VAT control 24,000 minus 1,500, which is 22,500. Then what else do we have? I think the additional information we are done as we're told them. Then they said bank should be last, so we still have bank. Our bank will be this one here. We add these two, 397,500 and the 2,500. So we have our cash and cash equivalents. That's 397,500 plus 2,500. What do we get? Thank you. 400,000. And the total, can you add everything? Thank you. 101978. So that's how we calculate these things. In fact, the total was not supposed to be given. So don't worry about the total. Any questions? All right, next question. Bank reconciliation statement of BAP. Right. In our bank reconciliation, we start with the balance as per bank statement. We are told that there was an unfavorable balance as per bank statement of 21940. Right. If there's an unfavorable balance as per bank statement of 21940, it goes on the debit balance. That's why you see here my debit balance as per bank statement 21940 is on the debit side. That's why you see it's on the debit side. On the credit side, there's zero. Right. Then the other things that we have to record in the bank reconciliation, those are the items that are in our cash journals, but which are not in the on the bank statement. Things like outstanding deposits and outstanding payments. And we also have to record errors made by the bank. All right. So we have to check for those things here. We are told that items appearing on bank statement but not in cash journals. If items are on the bank statement but not in cash journals, we are not worried about them in the bank when we do the bank reconciliation, except if there are errors made by the bank. Right. So here they've got bank charges. We don't worry about that. But here now, a deposit made for another client of the bank, 3,550. So someone deposited their money, but by mistake it was put in our account. So that one is to go on the debit side. So that's why you saw that I said debit error on bank statement, 3,550 on debit side there. Right. Then a correction of error 564 that appeared in the credit column of bank reconciliation as at 31 July. A correction of error, that means it has been corrected. So we don't have to worry about it. It doesn't feature in the bank reconciliation. Then cash journals reflected a deposit of 14,750 that was not shown on the bank statement. outstanding deposit are recorded on the credit side. So that's why I've got an outstanding deposit on the credit side here. You have to zoom. I think when you get this document, there is the outstanding deposit here on the credit side of 14,750. Then the balance per bank account, you can just find the difference between the two sides. So maybe let me just show it. So your balance per bank account was equal to 21,940 plus 3,550 minus 14,750. What do you get? I think it's 10,740. It's already given so that we don't waste time. So that's how I got that 10,740. So I just said to take what is on the debit side, these two, then you subtract this one here. That's how we get this one. Then the totals will be the same. Any questions? Right. Next question. A Waterhouse is a small township retail business that trades in soft drinks and is a 30 June 2019 financial year end. The business records the amount of inventory it purchases only on a cash basis. The owner, Daniel McCoy, is requested you to assist him in preparing the accounting records on an accrual basis. He has provided you with the following information. Right. Then the question is, use the information provided to prepare the trading session and other income in the statement of profit or loss and other comprehensive income. Right, so we can have, let me just pause. I don't think you can see clearly my the solution there. We are removing from our bank because that they wrongly credited it. So when they put money, someone else's money in your account, they will have credited in your account. So to remove it, we are correcting that. To remove it, we debit. That's the reason why we are debiting. So in the reconciliation, all amounts that were wrongly deposited in our account, we have to debit them. Right. Then we have statement of profit or loss. And other comprehensive income. For the year ended 30 June 2020. Right. It would start with our revenue. You would find that in this question, revenue is not given. Then we'll have to our cost of sales. Right. It would start with opening inventory. Right. We are told here in this question that on 30 June, that is at end of year, only 2,540 worth of inventory was still on hand. Then we are told that there was no opening inventory. So this one is the closing 2,540, opening is 0. So our opening inventory, opening is 0. You should note that in your answers, they might say a inventory, then they put a date. So you just have to check the one at the beginning of the end. Then purchases. Our purchases were given. This total here, 104,856. That one was a list of purchases. So that's 104,856. Then we have closing inventory. That's negative. The closing inventory, remember we found it here on number 1. That's 2540. So then our cost of sales will now be there, 104,856 minus 2540. What do you get? Thank you. One oh two three one six. Right. Then we get our gross profits. We are not told the sales. That's why I've left the revenue. But we are told something about gross profits. We are told the business sales products a 20% markup on cost. So that means our gross profit, when they say this, it means your gross profit is 20% of the cost of sales. Your gross profit is 20% of the cost of sales. So we'd say 20% times 102,316. What do you get? Thank you. $24.63. Right. If we know our gross profits, then we can find our sales, because we know that your cost of sales plus the gross profit will give you your revenue. Cost of sales plus gross profit will give you your revenue. What do you get here? $122,779. Right. Then remember that they said that you should prepare the trading section and other income. So then we'll have our other income. Right, the other income that we have in this question, we have Number 6. The business rents a pool table from a gaming agent. The conditions for the rental of the pool table is that 50% of the takings are business income and the balance goes to the agent as a commission. By 31 May 2019, 2,834 was deposited into the business bank account for the business share. At year end, the pool table had 1,840 worth of 2 rand tokens. So our portion is 2,834. We only record our proportion. So we'll have rental income, pool table, two 834. That's it. Any questions? So these were the things that were supposed to be, because they just said the trading account, that is the trading account is up to gross profits. Then the other income, we have the rental income. Right. Next question. What is the net asset value? Net asset is assets minus liabilities. Right. So our net assets is equal to assets minus liabilities. Right. Then we know that our assets would be equal to, we know that the assets are these ones here, the trade receivables, equipment, favorable bank balance. Bank, it's only an asset if it's favorable. Then we have got vehicles and prepaid expenses. So we're going to say that is equal to 122,000 plus 250,000 plus 100,000 plus 480,000 plus 3,600. What do we get? I'm waiting for you. Let's be fast so that we can go enjoy our youth day. Please, let's be fast, guys. Thank you. 955, 600. Then our liabilities. Right. Our liabilities, we know that these are trade payables, loan, and accrued expenses. Those three. So say 50,000 plus 300,000 plus 5,500. What do you get? Thank you. 355, 500. Then our net assets would be equal to 955, 600 minus 355, 500, which is equal to what? 600, 100. That's it. So that would be your net assets. So that's right. Next question. A disadvantage of using a single entry bookkeeping system is that a single entry leads to incomplete records, since the double entry principle, which requires that for each debit there must be a corresponding credit entry, cannot be applied where only personal accounts are accounted for. That's true. We cannot complete double entry, so it will be incomplete records. Right. Then number 22. The following information was extracted from the records of caller traders. Then they said use the information extracted from the accounting records to complete the asset realization. The asset realization is the account in which we record the sale of an asset. Right. So they said at the beginning of the financial year, 1 April, Kola Metals replaced its metals melting machine with a new metal melting machine that had a purchase price of 64,600. We're not, when we are doing the asset realization, we're not interested in the new machine. We're interested in the one that was sold. The replaced metal machine was sold on credit for 10,000. It was the only piece of equipment in the books. So that prior to the purchase of the new melting machine. So it's this machine here that was sold, because they said it was the only one. Right. What we do when we do the realization, the cost of 40,000, it goes on the debit side. I see that it didn't pick up the, okay, let me just, let me do the asset realization here. Right. Let's do our account. Right. Assets realization account. When you answer, you would find that some of these columns, like the folio, might not be there on your answers, so don't worry about them. So I will not even talk about them here. Right, first of all, we'll transfer the machine. We'll transfer the machine. The equipment, sorry, at its cost. Of 40,000. Which is this one here. Then the accumulated depreciation will go on the credit side. Will be transferred to the credit side. $32,000. Then the selling price will go on the credit side. It was sold on credit for 10,000. If it's sold on credit, it will be trade receivable. But if it was sold for cash, it was going to be a bank. So that's 10,000. Right. Then you take the larger total, you put it on both sides. Our larger total is 42,000. That is the credit column. The larger total, if you can see here, it's 32 plus 10, which is 42. You put the larger total on both sides. Then on the smaller side, you put the difference. Right? If our debit side is larger, there is a loss. If our credit side is larger, there's a profit. In this case, our credit side is larger, so there's the profit on sale of assets, which is the difference, which is 2,000. So if our debit side was larger, instead of a profit, it was going to be a loss, and we were going to record it on the credit side. All right. So this is our realization account. Any questions on the realization account? No questions. Okay. Then we'll. Okay, let me just. Right, so that's it. Then our last question. Financial statements are prepared from using the single entry are considered reliable, false. Remember that if you are using single entry, you are not recording the other leg. The financial statements that are reliable are prepared using double entry. So that is false. So these are the type of questions that I expect you to face. And feel free, if you face anything that is strange, you can contact me. Any questions? Okay, if we don't have any questions, then I wish you all the best and God bless you richly. And I wish you all the success. We hope to meet again. Thank you so much. Enjoy your holiday.